Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday the 23rd of October 2023, and in today's video, which incidentally has been more or less, not totally, but more or less produced by artificial intelligence, we look at how international conflict can affect the various asset classes that people like you and I tend to invest in. It's quite an interesting video, and it has a lady's voice for a change on this channel. So let us know what you think of it. We're not going to do too many of these. However, we thought we would give it a try. Also, if you haven't done so, please subscribe to our Finances Do Matter channel, where we have repeated this video. We cover a far wider range of investment classes on that channel. Well, let's look now at how geopolitical turmoil or international conflict can affect the value of our asset classes.
Have you ever considered how international conflict can shape the fate of your investments? It's an intriguing question, isn't it? And one that's more important than you might initially think. International conflict, whether it's political, economic, or military, can send ripples across the global economy, impacting various asset classes in different ways. What's an asset class, you ask? Well, an asset class is a group of similar investment vehicles. They are typically categorized into broad groups that behave similarly and are subject to the same laws and regulations. The 5 main asset classes include equities or stocks, bonds or fixed income, cash or cash equivalents, real estate or tangible assets, and commodities like gold and oil. Now, when we talk about the impact of international conflict on these asset classes, we're really talking about how changes in the geopolitical landscape can influence the perceived risk and therefore the value of these investments. For instance, in times of conflict, investors often flee to what are known as safe haven assets. These are investments that are expected to hold or increase their value during market turbulence. Gold, a classic safe haven asset, often sees price increases during geopolitical unrest. On the other hand, equities can be particularly vulnerable during periods of international conflict. Why? Because conflict can disrupt trade, impact consumer confidence, and create uncertainty, all of which can affect corporate profitability and therefore stock prices. But it's not all doom and gloom. Conflict can also present opportunities. For example, defense and cybersecurity stocks may see growth during times of tension as governments increase spending in these areas. And what about the new kid on the block, cryptocurrencies? Well, their response to international conflict is still a bit of a wild card, given their relative novelty and volatile nature. So, as you can see, understanding the potential impact of international conflict on your investments is crucial. As we dive deeper, you'll begin to see that not all asset classes are created equal, especially when the world's stability is at stake. Let's start with equities, a common area of investment for many. Now, equities, also known as stocks or shares, represent a piece of ownership in a company. When international conflict arises, these can be quite the roller coaster. You see, the stock markets don't like uncertainty. They prefer a steady, predictable environment. This is because businesses need stability to plan, to invest, to grow. Conflict, with its inherent unpredictability, tends to send the markets into a bit of a tizzy. Fear and panic can lead to sell-offs, causing stock prices to tumble. And that's not great for your portfolio. But here's the twist. Not all sectors are affected equally. Some might even thrive in times of conflict. Let's take defense and cybersecurity companies, for example. When tensions rise, nations start beefing up their security, which can lead to increased contracts and profits for these companies. Their stocks, in turn, may see a boost. But what about other sectors, you ask? Well, it's a bit of a mixed bag. Companies with international operations could face disruptions due to trade restrictions or logistical challenges. On the other hand, domestic-focused businesses might fare better as they are somewhat insulated from international turmoil. Then there are commodities. Conflict can often disrupt supply chains, leading to a spike in commodity prices. Companies in the energy or mining sectors could potentially benefit from this. But remember, these are just possibilities. The actual impact on equities can vary widely based on the nature of the conflict, the countries involved, the market sentiment, and a host of other factors. Investing in equities during times of conflict requires careful analysis and a keen understanding of the global geopolitical landscape. It's not for the faint-hearted, but then again, no investment is without risk. So while equities can be risky during times of conflict, they aren't necessarily a lost cause. It's all about staying informed, making smart decisions, and sometimes having a little bit of luck on your side. Now, let's turn our attention to the so-called safe haven assets. In the grand theater of global economics, safe haven assets play a crucial role. They are the actors who, when the stage is fraught with conflict and uncertainty, are often looked upon to deliver a performance of stability. But what exactly are these assets? Safe haven assets, as the name suggests, are investments that are expected to hold or increase their value during turbulent market conditions. They are the financial lifeboats, so to speak, to which investors flock in times of crisis. The most common types of safe haven assets are precious metals like gold and silver, and government securities such as treasury bonds. Why do investors turn to these assets in times of conflict? Well, precious metals like gold have been valued by societies for thousands of years. They are tangible, finite resources that do not rely on an individual government or economy for their value. This makes them attractive during periods of international conflict when traditional currencies and equities may fluctuate wildly. Government securities, on the other hand, are backed by the full faith and credit of a nation's government. They are viewed as safe because the likelihood of a government defaulting on its debt is generally quite low. This perceived stability makes them a popular choice for investors seeking a safe harbor in stormy economic seas. But it's important to remember that while these assets may offer a degree of safety during times of conflict, they are not immune to risk. The value of gold, for instance, can and does fluctuate, and while government defaults are rare, they are not unheard of. Moreover, the term safe haven does not necessarily mean profitable. These assets are typically less volatile, yes, but they also tend to offer lower returns compared to riskier investments like equities. Safe haven assets can offer a sense of security, but remember, no investment is truly risk-free. So as you navigate the choppy waters of international conflict, it's prudent to maintain a diversified portfolio and not put all your eggs in one, albeit shiny, basket. How about the newer kids on the block, cryptocurrencies, and what about property? When international conflict arises, the financial world can become a roller coaster ride, and cryptocurrencies are no exception. These digital assets, known for their volatility, can experience heightened fluctuations during times of global unrest. Bitcoin, for example, has been dubbed digital gold, and like its physical counterpart, it often sees an influx of investors seeking a safe haven during tumultuous times. However, it's crucial to remember that cryptocurrencies, while exciting and potentially lucrative, can swing dramatically in value. Therefore, they should be approached with caution, especially in an unstable global climate. Let's shift gears and talk about property. Real estate markets can also feel the heat of international conflict. In times of peace and stability, property is often seen as a safe and reliable asset. However, when conflict occurs, the story can change. In areas close to the epicenter of conflict, property values can plummet as demand decreases. On the other hand, locations further afield may see an increase in demand and, consequently, a rise in property value as investors seek safe havens. For instance, during a conflict, investors may choose to relocate their assets to more stable markets, driving up property values in these safe regions. But it's not just about location. The nature of the conflict can also influence the property market. Economic sanctions, for example, can lead to increased inflation and higher interest rates, which can negatively impact property values. Cryptocurrencies and property, each in their own way, reflect the volatility and unpredictability that can come with international conflict. They serve as reminders that the financial landscape is interconnected and that global events can ripple through every corner of it. Understanding these dynamics can help investors navigate the financial seas during stormy times, making informed decisions that align with their risk tolerance and investment objectives. Cryptocurrencies and property remind us that no asset class is immune to the effects of international conflict. So, what does all this mean for you, the investor? The world of investing can often feel like navigating a ship through stormy seas, and international conflict can whip those waves into a frenzy. It's during these turbulent times that the importance of a diversified portfolio truly shines. By spreading your investments across different asset classes, you create a safety net for yourself. When one asset dips due to conflict, another might soar. Consider equities, precious metals, bonds, government securities, and even cryptocurrencies. Each of these reacts differently to global events, and having a stake in each can help balance the scales when the world stage becomes chaotic. Staying informed about global events is also crucial, as these can significantly impact your investment outcomes. Knowledge is power, and in the world of investing, it can mean the difference between a loss and a gain. Remember, a well-diversified portfolio can be your best defense against the uncertainties of international conflict. We've covered a lot of ground today, haven't we? We've journeyed through the intricate landscape of asset classes and their responses to international conflict. We've seen how equities can be rocked by uncertainty, while safe haven assets like precious metals often shine brighter amidst turmoil. We've delved into the volatility of cryptocurrencies and property, revealing how these asset classes can oscillate wildly under the weight of global strife. And we've underscored the importance of a diversified portfolio, a veritable financial shield that can weather the storm of international conflict. Understanding these dynamics is not just a matter of financial literacy. It's about being prepared, being resilient, and seizing opportunities even in the face of adversity. It's about ensuring that when the world shakes, your investments stand firm. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe to our channel for more financial insights. Until next time, stay informed and invest wisely.